about the industry, life insurance industry, financial industry. And today it is a pleasure for me to be here again with you guys to talk about what's going on and how you can help your family, set your family for good, right? Set your family up for success financially. Okay, so my name is Daniela. For those who do not know, my name is Daniela. I am a licensed financial broker. I work with families and individuals to help them protect what matters to you, your college planning for your kids, your retirement, your mortgage, your life insurance, your health, right? Whatever it is that matters to you, that's how I help individuals. So this is my first time on TikTok at this time, so we'll see what happens. So anybody who's coming in, I thank you for logging in. Thank you for visiting. If you don't mind sharing, liking, and comment in the chat, I would appreciate it. So, bonsoir tout le monde. Moun ka pali kreol yo seulement yo, so fok m salue nou tout. So non, mwen se Daniela. Mwen se yon broker financière et mwen ede moun sous tout point qui est important pour yo quand il s'agit de finances. Que c'est retraite, plan pour collège pour ti moun nou, life insurance, protéger mortgage ou, protéger santé ou, right? So c'est ça ou que mwen fait. So jodi a nou pral débat un sujet qui très important pour moi. C'est une raison qui fait que moi t'es entré dans l'industrie parce que moi ouais en pile bagay l'autre monde yo a utilisé moi nous pas connaît yo. So pour moi by éducation de quoi que pour nous mener en vie qui meilleure. Thank you Facebook, thank you TikTok. No, I'm not inviting anyone to co-host. We don't need co-host. So you guys again comment, share. Hi Fabi. And yeah, let's get this show on the road. Thank you for those who have logged in and come. See, this is a subject that is not talked about a lot, but it's something that we need to talk about. Yes, it is Black History Month, so I am showing off my culture. Yes, showing a little bit of culture, right? So, last night as I was getting prepared for today's show, and something popped up on my screen, right? We have a dear beloved actor who recently passed. We know him as Dawson's Creek, right? On Dawson's Creek. So his name is James Vinder Beek. So he was 43, 40, some say 43, 46, right? He died of cancer. And of course, and I saw the thing that caught my attention. I saw that they're doing a GoFundMe for him. And you guys know, like, my blood get boiled, right? When I see GoFundMe, it's like, okay, why are we doing a GoFundMe for him, right? There are places, there are times for GoFundMe. So I decided to do a little bit of research, a little bit of digging to see what happened. Okay, so because we see all of those celebrities, we think that they are okay, that they are fine, right? They should be set for life. So he passed and left 6 kids, but on the picture I saw 4 kids. So he had 4 to 6 kids. That's a lot of kids, right, to leave behind at such a young age. So we're not here to judge, but we just want to look at what happened. And while the community, right, he was well loved, rallied around his family, and as of last night, they've collected $2.5 million. But still, when you think of $2.5 million, he just bought a house, 4.6. All right. So, per the article, the family, friends and family put this GoFundMe on for the family, for the kids and the wife, because of fear of losing the house and to maintain the house and literally to survive. It's like, oh my God. So you have to stop and think of your situation. We're not looking at his because I don't know all the details, right? There was no mention of insurance, nor did anybody deny it. So there was no mention of insurance. All they said, and all of his funds were depleted due to the illness. So diagnosed in 2023. So please invite somebody to come listen to this. Send me some love. Please share, like, and follow me if you're not following me. Right. So we're talking about a subject that I see it as a plague in our community. We are not properly prepared for when life happens. So it's not a matter of if life going to happen, it's a matter of when, right? Talking about the actor who recently passed, we know him from Dawson's Creek, right? He died of colorectal cancer, right? And there's a GoFundMe going for him. Now, I understand passed with a lot of kids, left a lot of kids behind, right? So, what I'm asking you, while his community rallied and then collected over $2.5 million for him, for his family. Now, do you have a community that would pour out so much support for you? Would your community, do they have the funds to come and raise money so that your family can survive, so that your house would not go into foreclosure? Right? So you have to ask yourself, are you prepared for the ifs in life? So what are the ifs in life? I know you may be young and healthy now, but to get diagnosed at 43 of cancer and leaving behind family, wife, and kids, and basically they are begging for money because whatever they have will not support them. So what do you have in place? What do you have in place if you should get hit with a diagnosis of cancer? So everybody's going to say, God forbid, it's not going to happen to me. But let me tell you, it happens every day. Every 30 seconds, somebody is being diagnosed with cancer. If you are in a room with three people, one is bound to diagnose with cancer. Stroke, right? Heart attack, blindness from diabetes, get amputated from diabetes. Those are the things that we don't think, because we always think like it's going to happen to the next person and not to us. Now, do you want to prepare? Do you want to protect your family in private so that you're not embarrassed in public? What do you have in place? What financial planning that you have, that if you get a diagnosis, that your medical bills will be paid for? So looking at the article, whatever money he had, right, was depleted. Sometimes when you're looking at your assets, what are you taking into consideration? How quickly can you liquidate your assets to maintain your medical bills? On an average, if you're going to chemo, on an average, chemotherapy is $50,000 per session. And this number is not speculation. I've verified it with a friend of mine who's going through it right now. So I'm talking about that from firsthand. She had to deplete everything that she owned. Thank God she has a husband that was maintaining the mortgage, but she literally had to go down to $2,000, almost to zero, in order to qualify for Medicaid and be able to get some more therapy. Her health insurance didn't cover it all. Actually, after 6 months, they sent her a note saying that we cannot keep your job for you anymore. Because, yes, you may have short term, long term disability at work, but how far that's going to get you? How far can that take you when it comes to high cost medical bills? So we need to stop and think, what will your family situation be if you get sick and you are unable to go to work? You cannot go back to work. You don't have a job. What will be the impact on your family? Like we see in this situation with the actor who passed last week, right? So the family had to do a GoFundMe because they said, right, they own real estate, but they cannot cover their bills with it because they'd have to sell the house. Where they gonna stay, right? He bought a 5 million, $4.6 million house 33 days before he passed, right? And family and friends had to help him to get that because I guess he realized that he is now going to leave only to secure shelter for his family. But how about anything else? College tuition. The kids are young, very small kids. College planning for the kids. From the article, it doesn't seem like that was in place. That's why they want to raise money to secure the kids' future, right? So, again, let's not assume that because, we see celebrities and they are set. No. So you have to think of yourself. You're not a celebrity. Your family, your friends cannot pull together $2.6 million for you. Is your community even able to support you, even for a burial? So GoFundMe is not a strategy. Let's get that out of the way. GoFundMe is not a strategy. So we shouldn't be betting on GoFundMe for your burial. I'm sorry, you're gonna pass. We're all gonna pass, right? So why not pass with dignity, right? You need to pass with dignity. Leave your family with dignity, right? Um, what I'm encouraging you guys to do, look at what you have. What you have, will it cover you in case of, hey, Dr. Katia, go ahead and share the share the live. Send me some love. Let's like, share, and follow for those who are not following me, right? So if you get sick, I have a lot of entrepreneurs, business owners that they are the plans. So if you get sick with an illness where your health insurance will not cover it, what do you have in place that can make sure that you are cared for? So we want to talk about life insurance with living benefits. So I know it's not a new term, but many people are still not accustomed to it or they've never heard of it. So life insurance, I said life insurance, I didn't say death insurance. Life insurance with living benefits is a strategy that you can have, is a plan that you have that can replace your income in case you get sick. And those conditions are critical, chronic, or terminal illness. Critical illness is cancer, stroke, heart attack, organ transplant. You cannot go to work because of a diagnosis. All you need is a diagnosis. A doctor say you have a diagnosis of cancer. You can leverage the right strategy, the right insurance plan to pay for your care while you are still living. You don't have to wait to die for your family to benefit. You can use the coverage to pay for high cost of medical bills, right? And for those who do not know, 62% of bankruptcies in America occur from medical bills. So, if you should get hit with a diagnosis with an illness, what will be the impact on your family? Is your family going to be okay? Or you have to deplete everything you have, like we see in Dawson's Creek case? There is no mentioning of life insurance. So we're going to assume there was not life insurance or there was not enough, right? So the wife had to create a GoFundMe in order for them to go on to make sure that their mortgage is paid, to make sure that the kids are cared for. So, mind you, you cannot buy life insurance after a diagnosis. You have to do it before, while you are young and healthy. Once you have certain diagnosis, the insurance company sees you as a liability, therefore they will not give you coverage. So you need to get it while you're young. Now, you have to think of the kids. leaving kids behind, they still want to do those extracurriculum activities. Because you get sick, your kids don't have to suffer, your family doesn't have to suffer. But with proper preparation, you can have a plan in place that can replace your income. Life insurance is a foundation, right, to stabilize your family financially when life happens, whether it is through sickness or death. Again, life insurance is foundation not only to build wealth, but also to provide your family peace of mind. So I know a lot of times when we hear life insurance, we think, okay, we're gonna die. No, the right life insurance will help you, will support you while you are living. I know this is not a hot topic, right? Nobody's liking, nobody's sharing. It is not a hot topic, but you have to think of your situation. How do you want to live this place? How do you want to live your family? Do you want to live them in chaos, or do you want to live them in peace? Thank you, Susan. Thank you for liking. um how do you want to live your family? Again, I always tell my audience, my families, protect in private. Protect your family in private so that you're not embarrassed in public. Thank you for sharing the live. Thank you, Susan. Thank you for your support. So, you have to protect your family in private so that you're not embarrassed in public. Now, we don't know what is the real reason why Dawson's Creek's family have to do a GoFundMe other than they needed to survive, they needed to stay in the house. He just bought a house, $4.6 million house, and with 6 kids left behind. So she needs a house. So they have to do everything in their power to protect that estate. But you have to ask yourself, are you in a position, are you in a community where they can come together and pull $2.6 million for you? I'm going to tell for the majority of us, the answer is no. If you look at the average GoFundMe, what are they doing? Two, $3,000, maybe $10,000. The average funeral cannot cost more than $10,000. The average funeral cost more than $10,000. Even if they were able to raise $10,000, what happens to your family? What happens to a house that you may have? The kids. How about their college planning? So we're talking today about how do you want to live your family? What will be the impact on your family if you should get sick with a disease, whether it's curable or uncurable? If you have a diagnosis of cancer, stroke, heart attack, what do you have in place that can replace your income? So I want to show you guys how life insurance, how important it is in your life, right? If you don't have one, you really need to see if you can qualify. Unfortunately, because you desire to have a life insurance doesn't mean that you can get it. You have to qualify for it, right? That's why I tell people when you are young and healthy, that's the best way to do it. That's the best time to do it. Certain diagnoses you can get a plan, but certain diagnoses like cancer, stroke, heart attack, you may not qualify. And cancer, you have to wait for 5 years, right? For 5 years in remission in order to qualify before you can qualify for life insurance. Now, you may say, no, it will never happen to me. Let me tell you, in America, 1 out of 3 people is being diagnosed with cancer, 1 out of 4 heart attack. Go check the stats if you don't believe me. So if you're in a room with 3 people, at least one of you guys is going to be diagnosed with cancer. It doesn't mean you're going to die, especially if it caught early. If it's caught early, you can get treatment and you can live, right? So statistics shows right now with the advancement of medical with science, right? 70% of those who are being diagnosed with cancer are going to survive. But guess what? 50% of them go into bankruptcy. Reason being, they don't have a plan B. 62% of bankruptcies in America is happening is the result of medical bills. So you have to ask yourself, okay, if you get sick, how are you going to pay your medical bills? I know you may say, oh, I have health insurance. Go check your health insurance. It's limited. It doesn't pay 100% for the most part. You still have a copay to pay. You may say, hey, I have long-term care, disability. Disability only covers 40 or 60% of your income. It is worth looking into a strategy that can replace your income when you get sick. Something happens to you. So, the right life insurance policy with the right company can offer that. All you need is a diagnosis. So, should you be relying on GoFundMe? No. I had seen a case that a family, my friend's sister's house got burned down, has a kid. That could be a good reason to do a GoFundMe for her, right? She didn't have a car. But when something like death or illness, you can prepare for it, right? We always think we have time. When it comes to protecting your family, you don't have time. The time is now for you to get proper protection for your family. We should not be waiting or betting on the government or GoFundMe for your burial or to even support your family. That's your responsibility. So let's be responsible adults, right? And get those plans in place. If you are working or if you're a business owner, you should have something in place. And a lot of times people say, hey, I can't afford it. But you find a way to afford everything else you want, everything else that you don't need, right? You make plans, you budget for your car insurance, you budget for your cell phone, right? Um, but why don't you plan for your family's future? Again, life insurance is a foundation to building wealth, to bring stability to your family as an income replacement. So when we talk about life insurance, so we are most accustomed to term insurance. They have different type of insurance, guys. There are four types of life insurance. You have the one you get from work, that's group, right? Group insurance. Once you leave the job or if you retire, you cannot take that with you. So again, it is normally minimum, right? Maybe 50. Very rarely you find a company that may give you $100,000. You have to be on the job for you to leverage that. And a lot of companies, you have to die on the job. If you're off the clock, if you're on vacation and you die, they don't pay. So check your policy. Go ask your HR. Go ask your HR person what happens to your group policy when you leave the job, whether you get fired or leave voluntarily. You do not get to take that policy with you. So, my encouragement to you guys is to make sure you have an independent plan. First of all, look at what you have at work. Is it enough, right, to even cover your funeral? I'm gonna bet no. Even if it's $50,000, right? The average funeral is costing you 25, 30 for a decent funeral. That does not include the repast, right? So what are you gonna leave for your family? So the first type of insurance is group health you get from your job. Now, if you don't have a job, if you're not a W-2, if you're just a contractor or a business owner, you are your plan. Do you have a plan that will support you when you get sick or when you pass? So my business owners, a lot of them don't realize there are different type of insurance you can get. You can get key personnel. If you have a partner, you can insure your partner. You can get overhead business insurance to make sure when you get sick, the bill's still going to come in, but you have an insurance that can pay your overhead cost. So you have key personnel. If you have a partner, buy insurance on them to make sure that if they should die, that you have money coming in to pay your overhead costs. Thank you for Facebook for logging in. Thank you for TikTok. So I want to hear about your comments, your shares and likes, um, so that we can put this out. So we're talking, reflecting on the actor who passed recently, and we know him as in Dawson's Creek. His family is doing a GoFundMe for him. Now, at first, I thought they were doing a GoFundMe because his estate got locked up, didn't have a trust. No, they're doing a GoFundMe for him because they depleted all of their assets, right? So, in order for the family to survive, they need the community's help. Now, there's nothing wrong with that, but do we really have to do that, right? Are we betting on our community to help us when life happens? There are cases we do, but there are cases that we need to have a plan in place. Now, again, there is no mentioning, right, of life insurance. I dig a little bit why we're doing a GoFundMe. He depleted his assets, and the family needs money to survive. Now, again, put yourself in his shoes. What do you have in place if something happens to you? So, but with the right life insurance, you can have income replacement. You can have a plan that pays you while you are sick. So, we're talking about the life insurance that you guys may not know about. There are different type of life insurance. So, we looked at group from your job. So, and if you don't have a job, you really need to get something in place. The second one is term insurance. That's the one that we are truly accustomed to, because that's what is been sold to us in the community. While the other plans that you'll see later, they've been around, but not enough people are talking about them because they are truly wealth building tools. They are tools, they are foundation to build wealth. And guess what? Not everybody wants you to build wealth. They don't want you to be okay. They don't want you to leave your family okay. So they're not talking about it, right? So, or sometimes it's just for the wealthy. No. So what are we using? The plan that we're using is for the poor. It's for the one who don't want to be wealthy. We want to be wealthy, right? So we want to use the right type of insurance that's going to secure our family. So those who are watching, would you please like, share, the like so that we can push it out so that we can get some more people in here. Okay. So term insurance, again, it's short lived. You have it for 10, 15, 25, or 30 years. Maximum you can get it is 30 years, right? So I have to say, are you planning on living a short life or a long life? So basically, you are gambling on your life. You say, okay, I want to live long life, but you're getting an insurance that has a term that says that you're going to die in 10, 20, or 30 years. Yes, it is an affordable option for families, right? It is great when it comes to pricing, but should you stay in a term policy forever? So let's use this because I saw someone use this, I'm going to use it. So let's look at renting and owning. So when you have a term policy, some people think, oh, after 30 years that they're gonna, hi Suze, they're gonna give you your premium back. No, unless you had a rider that gives you your premium back. No, you can spend 20 years, 30 years paying whatever premium. At first, it may seem cheap or low cost, but you pay 30 years for those policies. When you get sick, you cannot use them because the ones that we are most accustomed to, there is no living benefits in it. No, terminal illness is not living benefits. It's an accelerated death benefit that when you are on your last leg, when you have 6 months or less to live, right? But you could have been diagnosed with cancer 2 years, and you could have gotten treatment and lived, not wait for you to become terminal, right? So the right plan with the right policy, you can get what is called living benefits. Again, living benefits will cover your critical, chronic, and terminal illness. You don't have to wait till you get terminal to use your coverage, right? It will pay a lump sum. The term will pay a lump sum upon death. If you die while it's still active, term insurance, there's no cash value accumulated in it, which is why if you miss one payment, it will lapse. One payment, that's all it takes, right? It will lapse if you miss one payment in the term insurance. Again, I offer a term, I'm not saying it's bad, but you have to know what you have. The plan that you have, even if you have a term insurance, does it have living benefits? If you get sick, if you get a diagnosis of cancer, stroke, heart attack, organ transplant, can you tap into it? Hello, Jodone, Jasmine. If you get sick, can you tap into the policy and get money? Will you get a check from the insurance company to cover your bills? If you don't, you need to reach out to your agent and ask, hey, can I get the term insurance? If that's all you can afford, get the term with living benefits. Again, 62% of bankruptcies happened in America from medical bills. Medical bills. That's the number one reason for bankruptcies in America. I sell term. If I sit down with a young couple, young family, and their finances are not where it needs to be, yes, I'm going to help them get into a term policy. But guess what? They can convert it. Most of the policies that we have in the community cannot be converted. So get a policy that you can convert when your finances get better. Again, I'm not saying the term is bad. At least you have coverage, but get you something that can be an income replacement if you get sick, right? So it's cheap. Also, be mindful that when the term is over, if you are paying $50 for $500 term insurance, when you go to renew it, guess what? The amount may be triple. Reason being, you're not young anymore and your health may not be the same when you originally got qualified for it. Because what triggers your premium is your health and your age, how old you are and how young you are, how healthy, right? Based on your health and your age. So the second type of insurance that we see, we have whole life, right? You have two types of whole life. You have a traditional that has cash value, and you have a final expense. Final expense would be for someone um, advancing age. Like I look at final expense for my clients who are in their 60s, 70s, right? So people may say, okay, what is the youngest you can get insurance? As soon as you have 14, your baby has 14 days and has a social security number, you can get insurance on your baby. Yes, that young. Those who know, those who are informed, as soon as their babies have 14 days, it's 14 days, and have a social security card, security number, they are buying that policy because you know what? They're not buying it for death, they're buying it for life so that they can use while they are living, can pay college with it, can buy their first car, can buy a house for them, right? Set them up to build wealth and live generational wealth, build legacy. But us, we thinking, oh, if we buy an insurance plan for our kids, they're gonna die. No, I'm telling you right now, your baby is not going to die because you get a life insurance plan, right? Actually, they will thank you because not only you're securing their health, right, but you're setting them up for better things. We call them $1 million baby or grow up plan. It's a plan they get to grow up with, right? They can, when they turn 21, they can turn it into an adult plan and add other riders on it. Guess what? That money that you're accumulating in that policy guess what? You can use it to pay off their college. They don't have to take loans. They don't have to be starting life behind the eight ball. Give them a leg up, right? While I'm on this, yeah, my voice is a bit cracky. My allergies are acting out, so I'm a bit stuffy. Sorry. So, if you have kids, you don't have a plan for them, it's time that you check with me because I do sell them, right? Or if you have an agent that you are friends with, if you know an agent, seek them out. Do they offer the grow up plan for babies? Your child deserves better. Don't wait till it's too late when they get a diagnosis. ADHD. I do have kids that cannot qualify. If they have ADHD, if they have asthma, the insurance company will not cover them. So while your baby is young and healthy, get them coverage, right? Get them coverage. What I do for kids, what I encourage my families to do, instead of sending gifts during Christmas, why not open a plan as low as $30, $40? Have your family, instead of, right, sending gifts, sending toys, have them send money so that you can fund your kids' future with that. And I think they will benefit more, but they also will be grateful that you thought of them, not only to give them toys that they play with a couple days and then put it aside. That's what happens in my family. I have three grandkids. Yes, they get the toys. They are all over. I'm in their room, right? They are all over the place. But if you give them something that they can treasure, right? Thank you for those who have liked the live. So set your kids up. So the second type of life insurance is whole life, right? It's a permanent coverage up to 100 years. It doesn't expire. You don't have to renew, right? It doesn't have a unless you at that point at 100 years old they pay you out, right? That you can cash out. You don't have to renew it. The premiums are a little bit more expensive than term because it's offering you more benefits, right? Final expense up to 100 years for those who cannot qualify for traditional insurance, life insurance, or they are advanced in age. Because if you try to get regular insurance for your parents who are in their 70s, hi Mila, in their 70s, it's going to be too much. So get them a final expense, a whole life final expense for 30,000, 50,000. You can pay 100, 120, 130, depends on their age, right? So that when they pass, you don't have to be scratching your head, you don't have to be fighting with your siblings, or you don't have to do GoFundMe, right? If you are healthy and you are able, young and healthy, you need to have a plan that will provide your family peace of mind, and they don't have to do a GoFundMe for you. Again, we're looking at the example of the actor who passed. His family is doing a GoFundMe because they need money to support the family, the kids. Apparently, whatever he had was depleted. There's no mention of life insurance, or did he leverage life insurance while he was going through the illness, right? Again, what do you have in place so that your family is not embarrassed in public? Protect your family in private so that you're not embarrassed in public. Handle family matters in your house, not outside in the public with a GoFundMe, right? So people say, oh, it's expensive. It's expensive comparing to what? Is chaos? You want to leave your family in chaos or your family peace of mind, right? So we need to stop and look at what we're doing. How are we setting our family? Are we leaving them in chaos or peace of mind? How are you building wealth? Life insurance is the foundation to building wealth. Leave legacy. What is your legacy going to be like? What are you leaving behind? GoFundMe or bills, right? Your family losing the house because there was no mortgage protection. So there's a plan out here for everybody, right? Again, when you sit with an agent like myself, we go over your finances, see where you at, where do you want to go, and what is the best strategy for you. So no client is alike. So everyone, there is a plan for you. So it's a matter of you wanting better for your family, wanting peace of mind for your family, and not having to see, imagine yourself up there looking down and your family has to beg, your family has to do a GoFundMe to bury you. How would you feel? Is that your plan? GoFundMe is not a strategy. So get a plan in place. Not only when you're sick that you can borrow against it, right? You can get money out of your insurance to pay your bills, to pay your medical bills. Again, it's very costly. Cancer treatment is very costly. One chemotherapy round is $50,000. No, your health insurance will not cover it because they don't have that provision. If they do, maybe they cover two or three. Because I have a friend who was going through it, and I think they only covered three rounds of chemo for her. So she had to deplete her assets and be qualified for Medicaid. Is that what you want to do? Right? You want to secure your wealth by having a plan in place. So, whole life is a permanent policy, it does not expire, right? So, it builds cash. Now, one thing people don't realize, right? Yes, you can borrow from the cash while you are alive, but if you don't use the cash while you are still living, the cash goes back to the company because the whole life, the traditional whole life, has a level death benefit, meaning that your death benefit does not get added to your death benefit. Again, the cash, when you pass, the cash goes back to the company. Your family does not get the cash. So while you're alive, it's good. You can borrow from the cash, but you have to return it. You have to pay it back. So they don't have a no loan payback strategy. It's not a no loan payback. You have to pay it back. And a lot of times you're getting the cash. Yes, you're getting cash accumulation in the policy. At what interest rate? Tap 5% maybe. But when you have to take the money out and you have to pay it back, they can charge you up to 9%. So you have to be mindful. If you have a whole life and you want to leverage the cash, go ahead and ask them at what interest you're going to have to pay that money back. I've met many families that thought that their family had a whole life, but mom was taking money out, dad was taking money out of the policy and was not paying it back. So it didn't have enough money to keep the policy alive. So you need to be mindful of that. And the last thing we want to look at, the last type of life insurance is universal life insurance, right? Sometimes called IUL Index Universal Life, right? It offers you flexible premium and death benefit. Again, if you sit with me, I'm not going to say, okay, you need to get this plan. No, we need to look at your finances. We do what is called a financial need analysis. How much coverage you need, how much you can afford, what plan is best for you at the time. That's why I'm able to offer term that you can convert. Like if right now you're just starting out as a family and you don't have a lot of money to put into a permanent or into a whole life, yes, I'm going to help you get into a term, but you have up to 15 years, right, to convert it. When you convert it, guess what? You don't have to go through underwriting. So you locking in your health rating. That's the benefit of having a term policy that you can convert. So go ahead and get that term if that's what you can afford, right? But do it with a company that you can convert it later when your money is no longer funny. Okay, but I know, hey, if the money is funny, right now, get what you can, but at least have something that you can leverage if you get sick, right? If you get sick and you're unable to work, the bills are not going to stop. But the term insurance that we are most accustomed to does not offer that. There are a ton of companies that offer you term but with living benefits. And you may say, oh, Daniela, it's going to cost me more money. No. A lot of times I do parallel, I'll do comparison. The ones that don't give you living benefits and the one that give you living benefits, guess what? It's cheaper. So think, don't believe that because it doesn't offer you living benefits, it's cheaper than the ones that offers you living benefits. Yes, I do compare them. And 100% of the time, the other companies are cheaper than Primerica. Yes, I'm going to say it, right? So don't come for me, those Primerica agents, please don't. But when we look at the numbers, right? So they sell term, that's their jam, that's what they do. But I don't mind selling someone a term insurance, but I am going to give you a term insurance with living benefits because we do know that the benefits, the living benefits, are used before the cash, before the death benefit because of our current healthcare system. What we're eating, what we're drinking, making us sick, right? 1 out of 3 people in America have been diagnosed with cancer. So, would you not want to have a plan, whether it's a term or whole life or index universal life, have a plan that you can count on to help you when you get sick and you are unable to go to work? So, again, not dogging any company or any plan, but know what's out there. You have option. It's not one and done. You have multiple life insurance plans. There is not only one. Don't let them tell you there's only term insurance or you only need term or when you get older you don't need it. Guess what? Yes, you do. Okay? You do. And in Florida, somebody, every time I think about it, I can't help but laughing. So I live in Florida, so we see Florida as the waiting room, right? God's waiting room. So guess what? Florida is the state with the most retirees. Guess what? You need long-term care and those term insurance, they don't offer. Primerica doesn't offer long-term care. So how are you going to plan for your second phase of life? Are you going to be depending on your family? Are you going to be depending on the government to take care of you? When you were healthy, you were young, you were making money, and you could have bought you a long term care plan. You can get you a private long term care plan that where you have choice. Do you want to go to a nursing home? We Caribbean people, we don't want to go to nursing homes, but are we prepared to stay in the house with our kids, with our family? No. Get you a long-term care plan, then you have options. You can stay in the house and have nurses come and help you, or you can go to a nursing home, go into a private room. So I got into this industry after seeing how my patients were leveraging long-term care in the nursing home. I love those clients, those patients, because guess what? My money was guaranteed. They are guaranteed to pay you for years. So I didn't have to wait on Medicaid. I didn't have to wait on Medicare. I love those clients, those patients. Guess what? They get the best room in the nursing home. They get the window view. They get the water view. Guess what? Because they had a plan that they come and say, hey, you know what? I have a long-term care plan that's going to pay for my stay. All I have to do, send my claim every month and I get paid with no headache. So how are you planning the second phase of your life? Do you have a plan that can ensure that you stay in your house and not being a burden to your kids, right? We know a lot of people who have nurses around the clock. Guess what? The money is not coming from their pockets, it's coming from life insurance, long-term care. The long-term care plans, yes, they are sponsored, they are issued by life insurance like Nationwide, John Hancock, Prudential, Transamerica, the Hartford. Those are the companies that you can get long-term care plans from. So if this is new to you and you want to get more information, reach out to me. Again, I don't charge my clients for information, just like I'm giving you information here for free. I will sit down with you for free. Look over what you have. What is your financial destination? Is the vehicle or vehicles that you are in, will they get you to that destination? So I am looking forward to talking to you. DM me your questions, your concerns, right? What kind of plan you have? Is it going to get you? Is it going to provide financial security, financial peace of mind for your family if you get sick? Or will you have to do a GoFundMe, whether you get sick or die? Will your family have to do a GoFundMe for you? So let's not leave it up to chance. Let's not say you have time, you don't have time, because the younger you are, the easier it will be for you to get approved. The healthier you are, it is better for you. So get it now and not wait, right? Not wait till you get a diagnosis, because after you get a diagnosis, it will be too late. So again, I went over four types of insurance: group from your job, term, which is what we mostly accustomed to. It is short lived. So after 30 years, you've been paying your premium. It's like you're renting an apartment, you're paying 30 years. And now it's time for you to move out or buy your house. No, you don't have anything to show for it. The landlord is not going to give you your money back. There's no money to give you back. So that's like term, right? So you have the whole life, you have cash, you can leverage it, right? If you need to buy a house, you can use it. If you need to buy a car, you can use the cash in your whole life plan. Just be mindful that the traditional whole life, there's interest to be paid. You have to pay that money back. And universal life insurance offers you flexible premium. Guess what, guys? You don't have to pay into it for 30 years. You can pay into your policy for 10 years, for 20 years, for 7 years, and be done with it. Thank you for those who are watching. Thank you. Appreciate it. And those who have liked the show, liked the live, I appreciate it. Thank you. So, you don't have to pay for the rest of your life. You can choose to pay it 7 years, 5 years, 2 years, depends on how you're funding it. So those plans, you can fund them with assets. Let's say that you have money in your savings, it's not working for you. Guess what, guys? Life insurance, the right life insurance with the right company, is a way to leverage your money, to use your money to grow your money. Reason being that you are able to leverage life insurance to grow your money is because when you're using the cash value strategies, they pay you interest on your money, right? You grow your money. They use the concept of compounding interest. Compounding interest is your ability to get interest on top of your interest. So, what do you have right now that gives you interest on top of your interest? Your bank gives you simple interest, they only pay you interest on your principal. When comparing principal interest that you get from the bank and interest that you get from your life insurance, on an average, your bank is giving you 0.1%, 0.2%. If you're leveraging a cash value life insurance, you can get up to 8% on your money, compounding interest. Albert Einstein says those who understand compounding interest will earn it, those who don't will pay it. And how do you pay compounding interest? Your credit cards, your mortgage. If you take your mortgage, whatever you bought your mortgage for. Hi, Daphne. Thank you for watching your mortgage. You bought your house for $300,000. If you keep that mortgage for 30 years, guess what? That mortgage will cost you almost $900,000. That is the effect of compounding interest. The same thing in your life insurance, you can leverage life compounding interest. Actually, life insurance is the only strategy that where you can truly leverage compounding interest. If you are in a vehicle, in a strategy like stocks, your 401k, that's a variable product that has ups and downs, ups and downs. It's like a roller coaster. No, you cannot get compounding interest, because guess what? You don't keep your gains, you rent your gains. When you are in a strategy that is variable, that is affected by the market, by news, by whoever is in power, right? They said the wrong thing, it goes up. They say the right thing, it goes down, vice versa, right? You cannot control the market because it's controlled by others. It's controlled by New York stock market, right? New York exchange. So again, know what you have. What are you leveraging to really secure your future? If you are close to retirement age, the retirement plan that you have, is it sufficient to get you through 20, 30 years? to get you to your next phase, guess what? You can leverage life insurance as a supplement. It does not replace your retirement, but you can use it as a supplement. Again, you grow your money tax free. What vehicle do you have that gives you tax deferred benefits, tax advantages? You have the right to build wealth leveraging the right tax strategies. And life insurance is one of them. Life insurance, you pass on income to your family tax free. There is no capital gain tax on life insurance. So we can see why those who are aware, those who are informed, will put money in life insurance and leave it for their family. So, what are you leveraging to build your legacy, to build wealth and leave legacy? What is going to be your legacy? How are you going to be remembered? Are you going to be remembered through GoFundMe, that chaos, or are you going to leave your family peace of mind, knowing that you cared about them? You cared enough to put something in place to ensure that they're not embarrassed in public by asking for money to bury you. Again, thank you for those who logged in, for those who stayed on. I appreciate you guys. I am here every Monday between 1 and 1:30. Again, just providing information that that is foreign to a lot of us. A lot of us think of life insurance, oh, let me get my 30-year term and then that's it. No, there are different strategies that you can leverage when it comes to building wealth. Life insurance is a foundation to building wealth. But do you have the right type? Are you with the right company, right? If you have a term, there's nothing wrong with it. But can you leverage it if you get sick? Because guess what? When you get sick, the bills will still gonna come in. So what do you have to replace your income? Again, as a broker, I am able to help with term with living benefits. No, it's still cheaper than what you're getting with no living benefits, right? So I do those comparisons every day. People coming to me, oh, I have a term, but I want the one with the living benefits. Is it going to cost me no more? No. When we do the numbers, it outbeats the competition, right? The one that sells only term. I'm not going to say nobody's name, right? So again, I want you guys to review what you have, right? So again, the right policy, and I'm going to keep saying it, don't think that you have time. The right policy depends on your age and your health and your family situation. A term may be okay for you, but guess what? You have the option. If you get a term with certain companies like Nationwide, Transamerica, John Hancock, you can convert it into a permanent plan because everybody's financial situation is different. If you can only afford a term, I'm not going to leave you uncovered. Our mission is no family left behind. We are going to give you a term, but guess what? You can convert it when your finances get better. So at least get coverage, right? Get coverage. So you just need to start somewhere, right? So talk to a professional. If you don't have one, you can DM me. You can find me on social media, right? On Facebook, TikTok. I'm here. My number, I'll give my number. My number is 352-809-9037. 352-809-9037. So if you want a call, yes, so you can call me and I will be sure to give you a free, right? I don't charge my clients for anything. I will give you a free estimate, right? It will be an estimate because it will depend on your health rating. So a lot of times people come to me and say, I have great health, I'm healthy, just to find out they are taking 50,000 prescriptions, right? So be honest with your agent so that we can give you the best quotes possible, right? The final premium will be dictated by the insurance company based on your health rating. But at least reach out to me to see what you can qualify for, what we can get you into, so that when you do leave this place, your family is not left in chaos or having to beg, right? Having to beg for having to beg to bury you. You shouldn't have to. We live in the wealthiest country. I know that economy is hard, but guess what? There is something for everybody, right? So again, I want to wrap up with the example I opened with, right? So I was looking at the actor who recently passed, right? He had cancer. He had a family, a home, right? Nobody plans to leave their family in crisis. I hope you're not. I hope you're not planning on leaving your family in crisis. I hope you're not. Please don't. Right. So again, life insurance is not only about death, it's about the living, right? How you can support it, like set your kids up for college planning, home purchases, right? They don't have to use it only for college planning. Some people still have 529. 529 is only for college. When you have a grow up plan or $1 million baby plan for your kids, you can use it for whatever. Buy a home, right? Buy a home, college, car, whatever. So as we wrap up, right? So GoFundMe is a beautiful thing, but it should be a bonus. That shouldn't be the strategy that you are going for, right? If there's a situation that it needs to be done, hey, let's do it, right? But what are you doing to plan so that we don't go that route, right? So it's not a lifeline. GoFundMe shouldn't be your strategy. It's not a strategy actually to bury you or to uplift your family, to upkeep your family. So reach out to someone, reach out to me. Again, if you don't have coverage or if you don't know, if you're not sure you have enough, reach out to me for a free estimate, for a free quote. And I would love to chat with you to ensure that you are leaving your family in a good place, not chaos. Now is the time to find out, right? Don't wait. Time is not on your side, right? So, hey, if you found value in this, I'm asking you to share it out, to share it with someone who probably didn't know that they have different type of life insurance, right? You have different type. There's not only one. There are term, whole life, and universal life, right? So reach out to me so that I can give you more information and to see how each of those plans would fit into your financial planning.